Hey everybody, it's Greg Gossett, and today is Monday, April the 6th, 2019. And boy, what a day we've had so far. So the plan for today, the format today is, first of all, I'm going to have to run the U.S. required government disclosure. That's about 40 seconds. And then we're going to come back. We're going to take a look at my current positions, and we're going to see, I'm going to explain why we bought them, where our profit targets are going to be to the upside, and how to handle them in the future if they go down. So how to manage them going forward. Then we're going to take a look at my watch list, and we're going to see if there's any potential signals for today going forward. And then when we're done with that, after the market closes, if anyone has any questions at all, please let me know and I will do my best to answer them. So that is the plan. So before we get going here, gonna have to run this legal disclaimer very quickly. It's about 40 seconds, so hang with me and I will be right back.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, thanks for holding with me through that. So, all right, today has been a crazy day in the market. President Trump came out and tweeted about that he wanted to increase some tariffs on China. And so last night the futures opened down about 350. They got as low as about 550. Boy, I was preparing for a really bad day, but we've had a nice reversal. But you can see, I mean, look at this. Look where the Dow opened, bounced right at the 50-day moving average, and then reversed like crazy. So let's see what happens at the end of the day. That's why we wait till the end of the day to make our trades, because I feel like you get the best confirmation at the closing price of the whole day. During the day, you can have all sorts of weird things happen, but I feel like the professionals move the stock market to the correct price by the end of the day. So that's the Dow, big recovery. The Qs, same thing. We gapped way down. We reversed back up. We'll have to see whether or not this will hold. I have my suspicions, but you know, it's important not to trade your suspicions or your theories, but what the price actually does. The SPY gapped way down, reversed back up. So again, we'll just have to see what happens with the SPY at the end. IWM is the strong index of the day. That's the Russell 2000. Gapped way down like everything else in reverse. Actually went green on the day. So, okay, so that's what's going on with the major market indexes. Actually, the Dow is only down 63 now. The NASDAQ is down 38, and the S&P is down 11. So let's go ahead and take a look at my current positions, see why I got in them, and what we're going to do going forward. So Amgen, I purchased Amgen here when we went below and closed back above the previous range, and we also went below and closed back above the third ATR channel. So you know, going forward, I'm going to keep this unless we close back in the previous range. So unless we close back into 174.90, and you know, going forward, I did not enter this trade with the thought of this is the low of Amgen and it's just going to go way up from here. You know, this is a counter trend trade. Where I feel like it's going to move somewhere up into this range and then possibly either go back down or have a strong move to the upside. But, you know, my goal with this trade was to catch 3 or 4 or 5 days of a counter trend up to here, and that would be the extent of the trade. All right, give me 1 second, please. Okay, so Amgen, going forward, we're going to keep this until we close below the red line, which would put us back into the range to the downside. Goldman Sachs, we bought here on the 3rd of May. We bought this because we closed under the 200, back over the 200, and we had this higher low in place from here. And by the way, I did a video this weekend about higher lows and why they're so important. So if you have some time, go to my channel and watch that video. Higher lows are a huge part of my trading. And just real quick, you know, the reason why I like higher lows is when you make a lower low from here, like here to here, the people that bought here, when it starts to rally up, they're going to be looking to lock in price, just like Amgen, right? We bought here. I'm looking to sell up here. I'm not looking for, you know, to go to new highs at this point. So the people that bought here, when it got up here and lost the 200-day moving average, that was their time to exit. And that's, you know, that puts shares into the market and causes it to, you know, selling pressure to go down. So now once it starts to move back up, all the people that bought here, sold here, these sellers are out of the equation. So anytime you have less sellers, it's always a good thing. And, you know, it makes the possibility of moving up a lot easier. So as it turns out, I bought here on Friday, but of course we had this news over the weekend that no one could see coming, and, you know, it went way down. But I will be holding this as long as it stays above the 200-day moving average, because that was my initial line in the sand. And, you know, this is a good reason to wait till the end of the day to see what happens, because, you know, if you got freaked out and said, oh, it's under the 200, you know, it would have rallied a lot. You would have not been in it. So that's why I like to wait for the closing price above, or the closing price of the day, to make my decisions on whether to get in or out. So as long as this holds above the 200-day, I will be staying in, and let's hope it does. All right. Intel. This is a difficult one. I bought this on Friday when we, you see, the day before we were below the 100-day, and then we closed above the 100-day, and we also closed under the 30 and then back over the 30. So those were two strong entry signals for me to take the trade. Unfortunately, we had the news over the weekend, gap down. At this point, I'm going to stay in this trade as long as it closes above the 100-day. Right now, you can see it gapped under. Now it's having resistance at that 200-day, because what used to be support, if you lose it, now becomes resistance. So I will stay in this trade as long as it closes above 51.12, and it's just 1 or 2 pennies above right now. So this will be an end of the day decision. If it closes under, I will just go ahead and take a very, very small loss. And remember, that's what we want to do. If we're wrong, we want to take a very small loss. If we're right, we want to give it some room and let it move our way. That's the key of profitable trading. Okay, so Merck. I bought Merck back on the 30th of April when we had this attempt. You know, we rallied down. I mean, we started down here on this deep low. We rallied. This is approximately where I would be looking to sell if I would have bought and held. But I liked what happened when earnings came out. We tried to go down and we immediately reversed back up, showing to me a change in momentum and a change of trend. So we bought here at the end of the day. We have scaled out to about 25% of the position. Today we gapped down with everything else. This little dotted line here was my entry. As long as we hold today above the, we're going to have to see how it works, but you know, my options are the 5-day if I want to be really close with it, or the 20-day if I want to give it some room. I'm leaning towards the 20-day moving average as my trailing stop, and the reason why is see how it caught support here at the 20 this morning. I mean, That's right. It's almost probably to the penny where it caught the support. So, and I've already trailed out, or I've already phased out of some of my profits. So, I'm inclined to use the 20-day moving average as my trailing stop. Okay, boy, the SPY really beat me up today. And before we get into that, let me show you quickly. I call this my overnight SPY trade, and this is the reason why I buy it every night when the market closes, and I sell it in the morning first thing. But since 1993, if you would have bought the SPY on the open, sold at the close, so you buy it in the morning, sell at the close, you would have returned negative 5.2%. However, if you did the opposite and you bought on the close, you bought in the afternoon and you sold the next day in the morning, the return would have been 568%, meaning that more than all performance came in after hours trading. And if you can get your head around that, it's pretty crazy, right? Since 1993, literally all the gains in the S&P came from overnight. Now, the red line is the buy in the morning, sell in the afternoon. The green line is the buy in the afternoon, sell in the morning. And you can see the difference is just staggering. Now, this doesn't mean that you can't lose money on this. This back tested. This has done very well over the years, but you can see there are times where you have significant drawdowns. That's why it's important with any trading methodology that you, one, be consistent, and two, you position size correctly, because the only control that you have in this market whatsoever, when you really distill it down, is how much you are buying. So always position size correctly, somewhere between 5% of your capital or 10% of your capital. This shows you that no matter how good, you have a nice long-term system, but no matter how good the results are, you are still going to have drawdowns. And so, I had a drawdown today. Certainly, I bought here on Friday. I had to get out at the open. Big loss. I've been doing this about 46 days, 47 days, and it's still very profitable. But today, it probably took 20% of my profits over the last 47 days. And, that dovetails with what this shows. You are going to have losses with this, although in the long run, it tests very positively. So, it's a bummer. Obviously, I wish I would have not sold in the morning, but that's my plan, right? And I have to follow my plan. So I will buy this again at the end of the day, and we'll see what happens. But luckily, I only had a 10% position size, right? Imagine if I'd had 100% position size. So, days like this, we've rallied off the low, but it's important to realize that anything can happen. You can get a tweet from the president, you can get some kind of news, and if that happens, you are going to be really happy that you have a reasonable position size in your portfolio. When I saw that news this weekend, I was like, oh, thank goodness. Thank goodness I'm following my plan. I'm keeping my position sizes low. Now, when the market goes skyrocketing up, of course, you're like, I wish I had a heavier position, but it's more important to keep the money that you have than to make money, right? It's important to make money, but if you ask somebody, would you rather, have the chance of losing everything or making a ton? I think most people would say, well, it'd be nice to make a ton, but of course, my first priority is not to lose a lot. And it's much better to keep the money that you have than try to make lots and lots of money in the market with a lot of risk. The best way to go broke is to try to get rich fast. It's so true. I've been doing this so long. I feel like I've seen about everything that can happen. And, I look back over 23 years, and the regrets I have were I had too big of a position size. Did I get greedy? I've really changed my view on the market. And now everything, first and foremost, is risk control. And I would suggest that you think that way as well. Okay, so that's enough of that. Let's take a look at XLE. I got into XLE on Friday when we closed back above. See how we closed below the 100-day and then we closed back above the 100-day? That's why I bought it. I took a half position. My initial stop is going to be here at the 100-day moving average. And the reason that I took a half position was, one, we're underneath the 200-day moving average. So whenever we get under the 200-day moving average, unless we have a multiplicity of signals, I generally take a half position. But it's up today, so that's good. So I will continue to keep this unless we close below the 100-day moving average, and if it continues to go my way, I'll be phasing out. You can see these are my phase out positions. If we got here today, here today, here today, I have limit orders in that I put in every night. This is my initial target because we've made a lower low. I'm not thinking it's, going up to new highs at this point. I just am looking for a counter trend rally back up to the 50-day moving average and or the 50 RSI, and they're both actually at about the same place. So if it closes below the 100, I'll get out for a small loss. So my risk is, this area. My reward is this area. And if we actually closed above the 50, I would keep going. But, I would be looking for this to get to the 50 and get rejected, come back down. That would be my signal to, hey, Frederick. Hey, Ramble Rod. Hey, thanks for checking in, you guys. I appreciate it. Okay, so that is XLE. Going to keep this above the 100-day moving average. XLE, pretty strong today. I bought this on Friday when we closed above the 200-day moving average. MACD was green. All sorts of good stuff. We had this higher low from here to here. That was also positive. We gapped down and, it was looking really bad, but now looks like, we have a chance we may even hit a profit target today. Wouldn't that be something? So we bought here, right here at 90.13. So my initial stop is going to be the 200-day moving average. If we close below there today, I would be out. If not, if it keeps going, I will continue to phase, and this line, this line, this line are my initial phase points today. And this line here, the blue line, that is the 70 RSI. So this is my profit target. And you can see the distance to here. It's a nice distance. My potential for loss is any close under here. So you see how that works? You see how we have a small potential loss and a large potential win, and we're keying off a major level, which is the 200-day moving average. It should hold the 200-day moving average. If it doesn't and we're wrong, we'll just get out. So that's how we're gonna handle XLV going forward. Okay, so let me take a look here. All right, let's go through and see if there's anything that is interesting today. And, this has been a very volatile market. So, let's be conservative, make sure we know if we get an entry signal that we have very defined parameters of where we're getting in, where we're getting out, and not just take something because we get caught up in emotion. Don't get caught up in emotion in this market. All right, so here we go. We have Apple, gap down really strong, has reversed back up. I would like to point out that you see this here, this was resistance. Then we broke above the resistance. Now we lost the resistance. So this particular initial resistance that became support, this is a bit of a resistance again. And you can see that is right where Apple has stopped. So for me, I just don't like this. Not to say it can't continue up. It very well may. But I would really like to see some kind of close below the 20-day moving average and then back above. Here it tested the 20-day, but it did not close below. So, I'm going to be conservative here. I'm concerned about this previous high being resistance. And as you can see, it's exactly where it stopped. So I'm not interested in Apple today. Amgen, we discussed that, closed below this previous range. and then close back above. Also rejected the third ATR channel. So as long as this stays above this red line here in the old range, I'm going to keep it. What happened? Amazon. Same thing as with Apple. We had this previous high that was resistance. Here we broke out of it. Now we lost the resistance. Now this is going to be resistance again to the upside. And you can see it tested that and it's down below. In order for me to get interested in Amazon here in any way, shape, or form, I literally am going to need it to move down in an orderly fashion, close below the 20-day, which is the blue line, and then close back above it. So I'm not interested in Amazon here, although it could go up. It really could go up, but I'm not interested because things are not defined well enough for me to purchase this. All right, give me 1 second. Boeing. Well, Boeing got smashed pretty good on the gap down. For me to get interested in Boeing, I would literally have to have it move sideways for a while, stab down, reverse V1, or ideally a close below the 200-day and then a close back above. So I'm not interested in Boeing at the moment. Alibaba, people bought that breakout that happened on Friday and just got hammered because of the exposure to China. So would I be interested in this? Not really. I would have to have this move sidewards, close below this 50-day. I think the 50-day is the key point there for me. So as it is right now, not interested in that. Caterpillar, again, we close back above that 50-day. Gap down below. Now we're closing back above. Am I interested? Not really. I would rather have a close below the 200, which is the black line, and then a close back above. All right. You're going to be hearing me say no a lot today. Canopy growth. It did move down in a kind of a nice orderly fashion. It did bounce off of the 20-day moving average, close back above. But again, I'm concerned about the velocity of the overnight dump that we had. And I'm not sure if this is just a one-day rally and then the negative sentiment will take back over. I don't know. I mean, I wish I did, right? But just experience tells me to be careful. So for me to get interested in canopy growth, the 50-day here would be my first level that I would be interested in. Cisco, we did test that 50-day moving average nicely and rallied strongly above it. But you see the RSI here is 45.03. If you have a deep dip, you're going to probably rally back to the 50-day or the 50 RSI. We're only 5 points from that. So I feel like, this may continue tomorrow, possibly up into this range, but that would only give me this much to the upside and this much to the downside. If Cisco closed tomorrow somewhere in above the halfway mark of this bar, let's say it closed here tomorrow, then I might be interested in getting in because then my risk is smaller and I have more potential to the upside. I hope that makes sense. But when we have these big days like this and we get close to a 50 RSI to the upside, it concerns me. If it keeps going, great. I'm not in it. That's fine. I'll find another trade. But I think it's very likely that we could come back down, test this halfway mark tomorrow, and if we do, that would be my entry point because then I'm closer to the 50-day moving average, which would be my initial stop. Okay, the Dow, we talked about that. That is just a interesting bar, isn't it? Again, just as with Cisco, if we could get closer down into this range or closer back to the 50, I'd be possibly interested in buying it. It's possible you could buy it here and use the 20-day as your your initial stop, but I feel like it's too close, and I feel like the proper spot for any support, if we go back down, is going to be the halfway of this bar. So I'm not interested in the Dow at this point. Dexcom is moving sidewards there. It's a 49.92. You know, possibly a break above these bars up here for a breakout might be interesting, but as it is right now, no. eBay, gapped ups, holding the gap. We may be making a higher consolidation here before we move up, but for me to be interested, I would really need a close below the 50 here and a close back above. Okay, so Etsy's hanging in there today, considering 56.65 RSI. You know, it's not bad. The MACD is positive. We did close below the 50 and then close back above. We do have earnings coming up, but on the opposite side of this, we also are going to have some resistance here. So I'm just going to let Etsy go. All right, let me check my positions here. See how everything's going. Boy, if the Dow actually goes positive today, I'm going to be completely blown away. Facebook, gap down, reverse back up. We're up against the third ATR channel and overhead resistance here. Not interested in Facebook. 5 below did bounce at the 20-day moving average, which is positive. But again, as with most things, I want to see this close below the 20 and then back above. And that would put us right into the value zone here. We're a little overbought on the value zone. So, you know, I just know there's going to be people up here that we're going to be selling into this. You know, here we're moving up nicely, right? The buyers are overcoming the sellers. Here, the sellers, I mean, the buyers start getting overcome by sellers by the virtue that it starts going down. People possibly started shorting up here. People that bought down here are possibly taking some profits. So you have two sources selling. You have people shorting and you have people taking profits. That causes it to move down. Now, if I were short up here and it started to move back down here, I would probably consider to cover my short, which to cover my short, I would have to buy. And then people that missed out on this run, they're looking for a dip. So that's why on those first dips, you generally have a bit of a bounce because you have two types of sellers. You have dip buyers coming in to buy, and you have people that shorted above covering their shorts and buying. So that causes a move up. But the problem is now that we've moved back down, all your buyers were gone. Remember, your buyers came in here because you have dip buyers and you had people covering their shorts. That was your supply of buyers. Now that we've lost this, I don't know where your buyers come from anymore. You know, there'll probably be some buyers possibly waiting in the wings here, or here. But, you know, that's how I look at these charts. I look to see where the buyers, are they here anymore? Is there a reason for people to buy in the future? But as 5 below right now, I'm not interested in 5 below. The Swiss franc, I would have expected the Swiss franc to go up a little stronger because it's a risk off asset, but it's just moved sideways. Looks like MACD's possibly going positive. I'd like to see this move up to the 20-day moving average and then come back down, test that bottom, giving us a double bottom with a bullish divergence. So what happened? Okay, General Electric. We actually did buy this here when we had this higher low move back over the 100-day, and we also took out this fractal. We knew earnings were coming, so this was just an overnight trade, but it was a decent little overnight trade, right? I mean, it was 1.78%. But we couldn't hold it any longer than that because of earnings. I mean, obviously I wish we would, but I have a firm policy. I never hold through earnings because you never know what's going to happen. But we did test the 200 3 times. It couldn't go above. Finally on Friday, it moved above, attempted to come back down, but it was strong enough to close above. So this is all positive. I don't like that the moving averages and the 200-day moving averages in a downtrend. But it is positive that it's above the third ATR channel and also the 200-day moving average, but it's a 65.53 RSI, so it's a little high for me to buy. You know, if someone were to buy it here, I would certainly at least use the 100-day as my stop. Gold up a little bit today, but nothing major. In order for me to get interested in gold, I would have to have a 5 EMA crossing the 20-day EMA. That is a profitable back-tested moving average crossover approach that keeps you out of a lot of the noise. You know, when you take a moving average crossover trade, you have a lot fewer trades and you stay in the trade longer. And I wouldn't, just because this line crosses over this line doesn't mean anything to me, but it does mean something to me in this case, because you know, you can look back over many years and you can see that just following that 20, the 520 cross is profitable in the long run, based upon back testing. But going forward, who knows? You never know. But in looking in the rearview mirror, it was. So I will be buying gold if we get a 5-day, 20-day cross. Google. Speaking of back tests, if Google is able to close above the 50-day moving average, I will go ahead and take a position. I will be taking a half position, and the reason why is we've made a lower low. And whenever I buy something that breaks above something, and we have a lower low right behind us, close to us in the recent past, I would look to get in, but I would only look to get in a half position, because people that bought down here, if it gets back up here and fails, it's probably going to move back down. And then if it comes back down and then moves back up and have a higher low, then I would take a full position. But I do take, even from a lower low, I will enter the trade, because you never know, it could go up. But I know the tendency, and so that's why I would only take half of the position. But buying Google over the 50-day moving average is a profitable back-tested system as well. So my entries on Google would be a close back above the 50 or a close under and then back over the 200. Goldman Sachs, getting pretty close to our line in the sand, isn't it? So if it closes under that 200, we are out today. That's just what we're going to do. If it closes above the 200, I will stay in. It's very close, so it might be a photo finish. HCA had a nice big move up today. Boy, 2.32%. For me to get interested in this right here at the moment, I would have to have it break above the 200-day. That would be a double confirmation, because you'd have a break above the 200-day and you would have a break above this fractal, which both would be positive. But right here, I wouldn't be buying it because of all this congestion and the moving average acting as resistance above. So if it does move up above the 200 in the future, I will be buying it. IBB, I do like IBB. We do have a higher low, right? Here's the lower low. It moves up to about the 50 RSI. Here you can see, then it moves back down. Why did it move back down? Because the people that bought here, most likely when it got here and started to stall, they wanted to lock in their profits. That adds selling pressure. Now it's gone down. Now that it's strong enough to go back up, now I like it, because the people that bought here, sold here, they're now out of the equation. So, and it also triggered a fractal today of this bar. And a fractal is when you have two lower highs to the left, two lower highs to the right. And we are also above a 50 RSI, and MACD just went positive. So if this stays where it is right here, I will be buying it. I will target a 70 RSI, but as it moves up, like, let's say it continues to move up tomorrow and closes above the 200, then closes back below, that's where I would lock in my profit. But my, an immediate profit target is probably going to be somewhere up in here. So that is my potential, and my risk is a close back above the red line, which is the 100-day moving average. So I do like this a lot. The the risk to reward ratio makes sense to me. Hey, I think we just hit a profit target. Could it possibly be? Yes. On XLV, how about that? So we'll just mark that. So that's good. So that was about 10-12% of my total position. I like to take profits as the market gives them to me. Okay, back to where we were. What were we looking at? Oh, IBB. Okay, Intel. It's 51.16. If it closes above the 51.12, I will be keeping it. That's going to be a photo finish, so we're just going to have to see what happens. Boy, I'm going to have to get hustling here. IWM, boy, what a reversal. That's awesome. But nothing interesting there. Johnson & Johnson, yeah, nothing interesting there as well. Coca-Cola, we did buy Coca-Cola back here on the 9th when we broke above this 50-day. We trailed it up to here, which was a nice trade. We phased all the way up. We did have to get out before earnings. So nothing on that. Lockheed Martin, big reversal there, but nothing interesting. MasterCard, boy, big down day initially in a big rally. I mean, it's actually up today. It's unbelievable. You see how the 20-day is getting close, is about halfway of this big bar here. You know, if MasterCard comes back down and can hold, gets closer to that 20-day, then I would use that as a potential entry in the days to come, and then use the 20 as my stop. But buying here right now, the risk to reward ratio doesn't make sense, because I'm buying here. My stop would be here. I'd have to have twice that to the upside, so it doesn't make sense. I'd rather have it get back closer to the 20-day, which increases my profit potential to the upside, and it reduces my risk on the downside. 3M, it's just gapped down and continued to go down. In order for me to get interested in 3M, I would have to have a rally back up, then a move back down, then possibly a higher low set up with the V1 back to the upside, but nothing right now. Altria, we are in a higher low situation. People that bought here, sold here. That's most likely what moved it back down, but now it's able to hold. All the people that bought here, sold here, these sellers are now gone out of the equation. If we had a break back above the 200, that's where I would be interested, because one, we have a break above the 200, two, we have a higher low, and you can see the 50 just crossed the 200, which is considered the golden cross. That's a good long-term moving average crossover system. So for me to get interested here, would have to be a close above the 200. Merck, we talked about already. The 20 is my stop. Microsoft, big reversal, but not interested. Sorry, I'm running a little low on time, so I'm gonna have to crank through these. Netflix is range bound. If anyone has any questions about any of these charts after the market closes, please let me know and we'll go through it as long as you want. Nike, boy, oh boy, big down day. We actually bought Nike here when we closed above this fractal. MACD was positive. We rode it all the way back up to here. We got out here when we went above the 70, then closed back below, and we got out right about the high, didn't we? So in order for me to get interested in Nike, I'd have to have a close. At this point, I'd have to have a close below 30 and back above 30, or in that range. Philip Morris, just moving sidewards. PayPal, you know, bounced off the 20, but that's about it. It's very range bound. The Qs, we've gone over, gap down, reversed, still not sold on this because of all this congestion up here. Silver, we're going to have a 5 cross above the 20. I was talking about with gold, same thing. You know, the 5 EMA crossing the 20 EMA is a profitable back-tested system. Going forward, who knows, but in the past it has worked out well. So if we do get a close from the 20 back above the 5, back above the 20, that will be my entry point on silver. The SPY, I'm going to be buying that at the end of the day. Square, this is a bullish engulfing bar. You see how we're lower and higher from the previous, which is very, very positive. But for me to get interested in this here, boy, it would take a lot. It would take a lot. Probably a move up, move back down, make a higher low with the V1 or V2 entry. AT&T, somewhat interesting. Looks like we're trying to put a higher low in. Again, people bought here. When it got up here and filled, they sold. That's what moved the market back down. If it can hold here and move up, that'll be positive because people that bought here sold here. That selling pressure is gone. Conservatively, for me to get interested in AT&T at this point, I would have to have a close below and a close back above the 200, or a nice strong move up above the 50-day. So this one's kind of in limbo at the moment. TLT, which is bonds, moved up. It's closing lower than it's open. I'm not interested. Tesla, big day. But keep in mind, people that bought this dip here, they are looking at this very closely on when to take profits, because we made a lower low. Now we've rallied from a lower low, probably better than 50% chance that we're going to come back down. And if it starts to come back down, everyone that sold here is going to be selling in this area. That will drive it down. But if it's strong enough to hold and then can move back up, then I may be interested in buying it there, but not today. UNG, if we move strongly back up here, I might be interested in that because we made a lower low. We've rallied. Now we've come back down. The people that bought here are selling here. That's most likely what caused some of this sell-off. But if we can hold this, put in a higher low to the upside, like tomorrow if we went up and triggered a V2, I would be interested in that because I do like that MACD is positive. So this looks, actually, I really like this. Not for today, but let's watch this week. I do quite like that. United Healthcare Group had a big day up. Did trigger a fractal. But it's under the 200-day, and I don't like that the 50's right above it, so I'm not going to mess with that. Oil, whoa, big day. Unbelievable. Up 1.72%. I almost bought that Friday. I actually bought XLE instead. Would I buy it here? Probably not. I would probably have to wait for this to, there's a good chance this is going to backfill to about 50%. It may not. It may just keep on ripping sidewards. But, you have these moving averages above you here, which in my mind are going to act as resistance moving forward. So I'm just going to be patient, see if I can get a close closer back to halfway, which will give me a smaller stop to the downside and will give me more room to the upside. Dollar, nothing interesting there. Visa, boy, that's a tough one. You could make a case. You could buy this here and use the 20-day as your stop. But I'm just going to let it go. If we could close back closer to there tomorrow, I might consider it. But I just feel like this is too large of a bar to move forward on. Verizon, nothing there. XLE we have. We're going to use the 100-day. I'm going to use the 100-day as my initial stop. Consumer staples is range bound. Real estate. Did buy real estate here when we closed below and back above the 50. Phased out on the way up. I can't remember, about 25%, and then got out here when we lost the moving averages, and then right as I got out, it just goes up right against me, or it keeps moving up without me. But that's fine. That's just part of trading, and you have to get used to it. It's going to happen a lot, so just don't burn any calories on it when it happens. If you get stopped out and it goes right against you, just let it roll off your back. Really, it's not going to do any good. And just remember, your best trades are in front of you. Always think that, so just don't stress about the trades that you got out of and they went back and immediately reversed on you. It just doesn't do any good. Use that energy to study your charts, look for a good setup instead. Healthcare, did hit one profit target. Boy, if you would have told me I would hit a profit target today after watching the futures open last night, I would have said you are crazy, but it did, and that's great. Transports, this was another one where I entered here. See how we moved up, we moved down, we moved sidewards, we stabbed down and reversed. I entered here, but unfortunately, boom, I had to get out when the next day when it lost the moving average, and then it immediately again reversed on me, right? Just like XLRE, but that's what happens, and just let it go. Just let it go. All right, let's take a look and see what we flagged and see if there's anything interesting. To me, the only thing that looks interesting today is IBB, which is the NASDAQ Biotechnology ETF. And again, why is it interesting? Because we made a lower low, we rallied, we came back down. It was strong enough to not test that low, then move up strongly. It's taken out the high of this fractal. MACD went positive, and RSI is a nice neutral 51. Anything above 50 is a positive. You know, if you're at a 40 and you start moving up to 50, that 50 is most likely going to act as resistance. But if you can get above 50, then the paradigm shifts, and now the 50 is a support below you. So I will be buying IBB at the close if it closes above the 100-day moving average, which is the red bar. All right, let me take a look at my positions real quick. Just give me a second. Okay, so it is a red day, but I'll tell you what, it's about 20% of the red day that I thought we were going to have. So I feel like I made money actually today. I really do. It's weird, right? Okay, so let me get things back up here. All right. Hey, we have 13 people watching today. That's a record, folks. Thank you so much. I really appreciate you taking time out of your day to watch this live stream. I really hope it's helpful. And, you know, that's why I started this channel, because I really do want to teach people what I've learned, you know, over the last 23 years as a professional stock trader and money manager. I've learned a lot, and I feel like, you know, in life, this is my best ability, is to pass along information to people that are trying to learn how to trade and invest, and give them kind of a good model on how to view the market. So I hope it's helping. I hope it's helping. All right, so let me take a quick look here. All right. Okay. So let me put in a couple orders. You know, in this last 10 minutes, I can't speak quite as much because I have to, you know, I have several accounts that I manage, and I have to focus on doing the math right, placing the orders right. So my apologies, but after the market closes, we will stay on as long as people want. And
Order filled.
there we go. And then Excel, okay.
Order filled.
Okay, so let's get back to business and see what is happening here. All right, Amgen. Are we okay with Amgen? It does look like we are. Goldman Sachs, that's going to be a tough one. Oh, let me show you this real quick. This is what I do every day. There we go. I write down my positions, and I write down exactly where I'm going to sell them at the end of the day. Amgen, sell below range, and I put the price. Goldman Sachs, sell below 200 and put the price. And I do it for two reasons. One, because I like to write it down. It makes it more formal that this is my plan, and it's important to follow your plan. So if I write it down and don't do it, well, that kind of looks bad on me, right? And the other reason I do it is so that I can just immediately look quickly and see where my levels are. These are my levels. So Amgen, sell below 174.90. Goldman Sachs, sell below sell below 200 day, and I put the price. Intel, sell under 100, 51.12. So, I recommend this for people because one, you're busy at the end of the day. You may be searching what exactly is my number. So, it's nice right in front of you. And the other reason is that, you're kind of committing yourself. This is what I am doing. So anyway, I hope that helps. All right. So Goldman Sachs is something we're going to have to watch. Intel, so far, so good. Merck, looks fine. SPY, we're going to have to buy my 100 SPY here at the end, even though I got walloped yesterday. XLE looks fine. XLV looks fine. We did hit one profit target. And then IBB, I will be buying this at the end of the day. So let's see. So we have about 9 minutes. Yeah, Bruce, it's looking a lot better. Thankfully, right? It was ugly last night. So, so really what we have to look for here is the main ones are Goldman Sachs, close above the 200, I keep it. Close under the 200, I am out. And then Intel, if it closes above 51.12, right now it's 51.22. So we will watch that closely. And then IBB, that looks good. I might just go ahead and get that right now. Looks like things are moving. So let's see.
Order partially filled. Order filled.
Right.
Order partially filled.
All right.
Order filled.
So we have about 7 minutes. I'm going to wait on the SPY before I buy the SPY. IBB, I just bought it. So we'll see where that happens. Let's see. So that's our entry there. So we'll add this over here. All right. So again, Amgen is fine. IBB we just bought. Goldman Sachs right on the bubble. That's our main one to watch. And that's 206.32, and right now we're at 206.49. Merck looks good. SPY we're going to buy. XLE is holding. And XLV, one profit target. So let's take a look at Goldman Sachs intraday and see what the intraday chart looks like. See this big strong move we had up? See how we're coming down now? I wouldn't be surprised. This is a 39-minute chart, but I would not be surprised if we watch this price stop right about here, because we had this big strong thrust. Although I don't like the volume here. The volume on the downside was larger than the volume to the upside, and even on the intraday chart. It's a lot of volume intraday. Well, looks like it's under now, so I'm going to have to get that one queued up for a potential sell. All right, get that one queued up for a potential sell also. All right, so I've got Goldman Sachs queued up in 2 accounts to sell. So we have 5 minutes, and we have to watch Goldman Sachs. We also have to watch for the SPY purchase as well. Seems like that one's fine. IBB slightly under where we bought it. Goldman Sachs really looks like it might lose that level, which we're going to have to get out. Intel is keeping above, so far above the 51.12, so it's about 10 cents away. So it looks like we're having a little bit of selling back into the close here. All right. Oh, NVDA, let's take a look real quick. Well, I mean, it's good that it rejected the 50-day, William, for sure, and closing back above. I mean, would I buy it right here? If I owned it, I'd probably keep it to the 50. If I didn't own it right here, I don't think I would probably buy it unless we maybe broke out above here. But let's take a look at that. We can look at that and flesh that out a little bit more after the close. But it is smart. I mean, it certainly is good that it's closing above the 50-day, 100%. 206.32. Boy, that's going to be it's going to be so close. That's going to be so close on Goldman Sachs. All right, I'm going to go ahead and get the SPY just to get that out of the way, because that one we're buying for sure, or that I'm buying for sure.
Order filled.
All right.
Order filled.
Okay, so SPY is taken care of. 292.80. Be careful out here, folks. This was a big reversal, but you just never know what's going to happen. And I think some fear came back into the market. I'll remind me to show you the VIX when we finish up here. Goldman Sachs. Are we going to be able to hang on to Goldman Sachs? I don't know. What do we have? We have about 1 minute left. 206.32. Boy, that's going to be close. It is going to be close.
Order partially filled. Order filled.
Yeah, it looks like it's going to stay above. We're getting into that area where I really am not sure what I can do. I'm not really going to have enough time to get everything, but it looks fine. It looks fine. $206.32. We have 8 seconds. Yeah, it looks okay.
Order cancelled.
206.43. Whew. Boy, we stayed in. So Amgen, we're fine. We're above. This is our stop here. IBB, we bought right here, just a little underwater, but that was a good trade. We had a higher low and nice break above a large moving average and above a fractal. Goldman Sachs did close above the 200-day. Intel did close above the 100-day moving average. Merck did close, stay above our 20-day moving average. SPY, we purchased that at the end of the day. I did. XLE is holding above the 10-day moving average, the 100-day moving average. And XLV, we actually hit one profit target. So not too bad. Down day today, but boy, compared to what I thought it was going to be, this was a major comeback. Major comeback. So, all right. Hey, before we get into questions and answers, just want to put in my little plug. I do offer private one-on-one teaching and coaching via Skype during the evening time. So, if that's of interest to you, do you feel like you could benefit from that? Let me know. I have had very good success with my students, and I put a lot of work into, my students. And so if it's of interest to you, let me know. My hourly rate and my contact information are in the description section of this video. And if you like what we did today, and if it was helpful to you, I'd appreciate if you could hit the thumbs up button or share it on social media. And if you haven't subscribed to the channel, go ahead and subscribe. So, okay, that's it for my plugs. And let's see if anyone has any questions. Okay, Bruce, thanks. I will have a good hike going golfing. Smart. Let's take a look back at NVIDIA for William. So, yes, William, it is really good. We have this upward sloping 50-day moving average, which is, I like to buy when we come back to upward sloping major moving averages. So yeah, it's positive that we tested it and reversed back up. Ideally, if it had closed below the 50 and back above the 50, I would like it better. Let's take a look at the weekly on this and see if we can gather anything from weekly, because I do like to look at charts on multiple time frames as well. And this is the weekly, but you can see on the weekly we moved into an uptrend. We have come back down. We've come back down and we've tested the 20-week moving average 1, 2, 3 times, which that is positive, right? And, we had a nice up move, so kind of a nice orderly move back down. That's a positive sign. That's a healthy sign. And that's on the weekly. So on the weekly, does it look fine? It looks pretty good. Uptrend, move down, caught support on the 20 weekly bar, and then we look at the daily. And do you have a confirmation on the daily? Yeah, pretty good. So the weekly looks good because we have the weekly looks good because we have the support underneath of the 20-day moving average, and this is just a pullback in an uptrend. And then on the daily, we're looking for some kind of entry signal, and the entry signal here could be the rejection of the 50 back up. So if it were me, it's a 46.50 right now. So its expected move to me is probably up in the 50 RSI range, maybe up to here. So the risk from here to here is larger than the move upwards that most likely will happen. So if I could get a close back here to this 50, or closer to the 50 or halfway of this bar, then it gives you more risk or more reward to the upside and smaller risk to the downside. So that is what I would be looking for on NVIDIA. So I hope that helps, William. Does anyone have any other questions about what we did today or any of the positions we took or have any good jokes. Any of those. So let's see where the market actually. Yep. So the Dow is down 66, Nasdaq down 40, and the S&P down 13. So quite a big comeback. Okay. Any other questions before I go hike in the mountains? Oh, here's Frederick. I bought VK today. Frederick, I'm putting that in, and I don't find the symbol. What? Can you tell me the name of what that is? Maybe I can look it up that way. See, if I put VK in, this is what I get: Van Kampen Advantage. So I don't know if that's a European stock, Frederick, that I don't pull up on my charts. But if you could tell me the name of the company or the index or the ETF of what it is, maybe I could look it up a different way. Okay. Let me see if I can look it up this way then. Shoot, buddy, I don't see it, unfortunately. It's not pulling it up for me. I'll tell you what, why don't you let me try it a different way and see if we can find it. We'll take a look at stock charts. Yeah, as you can see, I can't pull it up there either. Man, I apologize. I wish I could help you out. Maybe what you could do, Frederick, is send me a, through my email or through Twitter. Maybe you could take a snapshot of it, and then I can look at it that way, and we could possibly talk about it tomorrow. Ramble Raw. Okay, CVSI. Okay. All right. Well, this looks pretty good. Let me take a look at this on the weekly. On the weekly, Ron, we did move up. We have come back down. We've kept about halfway of this large bar. We have closed below and then back above the 20-day moving average. At the same time, we're about halfway of this big bar. So that is positive on a big picture. On the weekly, it looks fine. And then on the daily, we had a V1. This bar took out this bar, then closed above that close. That is positive. Long term, this looks pretty good to me. In the next day or two, Ron, I feel like it might come back and kind of test the halfway of this bar. But if I owned this stock right here, what would I do with it? I would probably keep it here unless it closed below the 200-day. Actually, I mean, even if it closed below the 100-day, I might consider. But I feel like we have that upward sloping 200-day moving average, which I think looks like it's probably going to act like some support. So, it's okay. I think it's a little overbought for one particular day. I mean, it's up 5.74%. Anyway, I hope you had it because it's a good day. So yeah, if it were me, I would probably keep this until it closed below the 200-day. Going forward, it's a big, strong day on nice volume moving forward also. So that's my take. I feel like it's probably going to run into some resistance here at the 50 RSI, and it might backfill for a little while. But this was a bullish engulfing candle to the upside. Nice rejection of the 100-day V1 entry. Nice volume. So yeah, looks pretty good. I hope that helps, Ron. All right. Any other questions? Okay. Well, listen, I appreciate everyone coming by today. It was nice that we had so many people watching, and I really appreciate you taking the time. And hopefully you will be able to check in with us tomorrow again during the last hour of the market. And by the way, like I said, I did do a video about the importance of higher lows. It's on my YouTube channel. It wasn't a live one. It was one that I uploaded. So if you get some time, go and check that out. They're very important to me trading wise. And I think if anybody starts, noticing them, using them in your trading, I think it's going to be a positive. So, all right, everybody. Well, thanks again. Hopefully see you tomorrow during the last hour of the market. And on the way out, I'm going to leave you with the U.S. government required disclaimer. So have a great day and take care, everybody. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.